computer there. Okay, awesome. All right, I've got, what do I got going here? I've got a whole bunch of slides that I made out of what you've sent me. I want to welcome Professor Paul Waterman, our course lead, and this is our Beyond 2 video. Beyond 1 was Beyond, I call BeYoND. I'll show you that. It's from the first video we did together, which is before your next decision. Watch this. So this is between our second and third. I have a bunch of questions that came up, and Professor Paul has been kind enough to agree to help answer these questions. Okay, so can you see this okay, Professor Paul?
I can see it,
No,
yes.
I'm going to zoom in on it as long as I just want to make sure that it's up on the screen. So this kind of, I just got a couple of slides to show from, we're not going to cover all this stuff, but mostly some of Coach Paul's tips. I'm calling this Professor Paul Shortens the Learning Curve. And that's exactly what happened with our first video that we did together, where I took part of the student and asked a lot of questions, Professor Paul, and then we made about an hour and 7 minute long video that we edited down and used with some of your recaps and also posted on the forums and in your CLC groups. And the feedback was amazing. We had groups of our 5 color teams. We had groups saying this Professor Paul lit up all the light bulbs. The light bulbs are on. We see what's going on. They're telling each other this is a must watch. So that was
Good.
before 1 and into 2. Now this on housekeeping on the just the housekeeping side of this, where it's where it says success over communicate. We have set up a whole bunch of communication forums, and Professor Paul talks a lot about team enthusiasm with his experience of all these years working with actual on the ground teams where people get really excited about, they work together, they get competitive. And I was hoping to at least have a part of that with our online, even though um, Coach Paul does 15-week courses live. Um, then this is only our 8-week with only 5 decisions instead of 7. So we have to have a shorter learning curve because you have less time to get up to speed, and you also don't have Professor Paul. So there's a lot of things that go where we need help with this short of a thing. But what is interesting to me is that in discussing the enthusiasm of his teams, I've seen this happen now in this current group that just validated yesterday. And I haven't had time to do your recap yet, but this is part of it. Want to answer some of these questions and issues that you have asked before and that Professor Paul has already answered for here, which we'll get to. But the key housekeeping is to over communicate for success. And you'll see there's a lots of different ways we've set up now. I've chosen well, you actually chose your teams, but I've connected with a team validator on each of the teams, and they've been working with me right up to the last minute for validation, so we don't have a question of whether we can run the sim or not. That's worked great for 2 decisions now. And you're also communicating with each other on Zooms, messages, texts. We've set up text groups. One thing that Professor Paul keeps reminding me of is the CLC chat groups, and those are all set up. But what I've noticed in the last 2 decisions is 3 of the 5 of you are using the chat groups and 2 of the 5 aren't. And you may not know about it's in the go to meeting under that topic. But also there are instructor added under discussions. This is instructor added discussions. And I add one for every group, put in all the videos and put it in the individual password videos in your CLC groups. So that's just something we need to kind of work out. But Professor Paul, it's really interesting because the questions I've been getting are such a range. I'm sure you found this out too, just from the very beginning of getting used to the sim, where I had our top team said, okay, we did a forecast and we worked down to 2 scenarios with the forecast with our CapEx decisions. And can you help us decide whether we should go all in on a line here, which is this forecast, or should we split the difference here? And of course, I can't answer that for them. It's like they have to answer themselves, but I did look into it. It was fascinating. And the thing in common it wasn't a common denominator, it was a common numerator, and all the ratios they were testing was EBIT. So I said, hey, go back and look at your EBIT and see if it tells you an answer to this. And this is just to illustrate. Then that was our top group asked that question. I was really tickled and happy to get the question. Then one of the other groups, so I won't mention their color, texted and said, so for the second decision, what do we do? Do we go in and just move the sliders around and then see what happens? And so, I mean, Paul, this is like the variance, the difference in the different groups. So what I like about our BeYoND series here, this is our second video, is that answering these questions and showing where to focus and what to look for and what to look at is a great way to where Professor Paul can help guide our teams in terms of what is the actual focus that we should have. And these are some points that I'm going to turn the floor over to Professor Paul, but these are just some of the things that I've been taught in terms of helping guide you on where your focus should be instead of, just going after price. And we could just you can take a chance at time and also stop the video. By the way, the first video I mentioned, the BeYoND video, is the descriptions. The link is in the description if you need to go down and look at that if you haven't looked at it yet. I know all of our teams have said they are watching it, and that it's wonderful. But these are some of the points that Professor Paul brought up since then, which is don't make some of the rookie mistakes that happen at the early part of the game. And this is so important because it's like you don't have as much time as this 15-week classes have to get this.
Yeah, no, that's true. And I think what everybody playing the game needs to know is that this is not a spoon-fed thing. You and your team have to figure it out. And there is no right answer, and it depends on your competition. That's why it's a strategy game. And so, you or I could look at it and we might choose something that works or doesn't work. You have to try to get some insight as to the kinds of decisions your competitors are making and where the opportunity lie for your team. And so there is no answer. Now, with respect to the sliders, so, that group would be saying, in effect, well, if I worked for an auto company, I would just randomly change stuff every year. Like, would you do that? No, you wouldn't do that. And the key, like every single period starts the same. Every single period should be looking at the competition, looking at the customers, trying to understand why are the customers choosing us? Why are they choosing one of the other competitors? Is it price? Is it marketing? Is the engineering different? So every decision starts the same way. And so that's the key thing. And before you decide where you're going to deploy your resources, you have to decide. And it's really interesting. Students will find that there will be teams that have higher price vehicles selling. People are lining up to buy those. And the low price vehicle no one wants to buy. Well, that's probably engineering or marketing. So, and then you have to look at the cost structure. There are just many, many things. So none of this is random. I think early on in the game, as students are trying to figure out how to play it, sometimes they're like, they're overwhelmed and they just say, well, we got to pick something. So we'll pick this because we have to get the validation done. But the goal is over time, over the 5 decisions you're making, slowly you're starting to realize, it dawns on you like, oh, okay, I have to control this aspect. And so it gets easier each time. And I note in my classes, in the professional context, because this simulation is played in corporate context all the time. Those people show up, they have the pre-reading, and then over the course of 2 days, they make 5 or 7 decisions in 2 days from scratch.
Wow.
So there's no, tell me how to do this, or I'm not sure I understand this. Like, you have to figure it out. And that's its capstone. That's part of the idea. And the teams that are focused more they divide up their effort properly, and they're working as true teams, are the ones that capture more of the interesting insights that cumulatively equal victory. And if that makes sense. And so, and I
Yes.
would strongly suggest profitability. If your universe allows you to be profitable, this game is made so that all car lines at some point in a normally functioning universe can be profitable at some point. Now, if you happen to be in a universe where one or two of the teams just keep dropping the price, they're not focused on retained earnings. They're not focusing on being profitable. They're focusing on selling cars at a loss, I guess. That would be a tragic mistake. So the message, and I hope, and I share this with my classes all the time, although some teams they never quite get there. I say, you look at all the teams in your universe, if no one is making money, that is a clear sign to raise your price.
Yes.
Because if you're running this company as a true executive, and you and every one of your competitors were operating at a loss, that means the industry vaporizes. It's going to go bankrupt and out, gone forevermore. And so that's not healthy. That's not good. You're not doing the right thing for your stakeholders. You're not doing the right thing for your employees. You have to figure out how to operate profitably. And so if you can. Now, if you can't operate profitably, that's strategy. So if two of your competitors are lowering their price, losing money like crazy, then the reality is the smart thing to do is for you to tap out of that, build fewer cars,
Yes.
defocus. It's not ideal, but that's what you have to do because you are the steward of the resources of everything that your company controls, the employees, the balance sheet, the factory, the plants, your image, everything. You have to decide how to deploy that, orchestrate deploying that profitably. And if you can't do it profitably, you should focus on getting as skinny as you can on your balance sheet. No inventory. I mean, you don't want inventory anyway, but produce fewer cars. Your cost per car is going to be much higher, but you'll be losing less money than all your competitors that are producing large amounts of cars and selling them at a loss.
Yeah, we had one group, I'll show the numbers in a second, but one group actually crashed and burned because they did exactly what Professor Paul is saying. And this last point is something that Coach Paul is always reminding me of, which is the marginal per unit costs with CapEx and your investment. Keep your eye on profit and break even rather than, oh, wow, look at this great market share where we're losing money faster than anyone else.
No, they go for, and by the way, I've had universes where the number one team, they win, but they're losing money like drunken sailors.
Yes.
And so that's not, I mean, we're a business school. We're trying to understand how to operate and make profit so that we can do great, wonderful things with the profits that we make, like, doing great things for our employees. And, a lot of wonderful things happen with profit. We have to be profitable.
Yes, that's one of the issues is that people who business bash profits, and what profits are future costs. They are, in a real sense, the company's future. There are revenues that take care of current earnings, but when you have something excess of over your costs, that's another type of cost, and it's been proven one side up and down the other mathematically that profit itself is the cost of the future. So regardless of what opinions vary, but the truth is without that there is no future. What I wanted to point out, a couple things just between you and I, and the overlay will show this with a circle on it, which is we have our mysterious 1899,
That's right.
1899 there, and what happened is blue team crashed and burned, and you can tell by the fact that they all took out their $2,000 loan, you can see what the government had to give them there on theirs.
713. Well, no,
Exactly. Well,
seven. It was where's 18? Oh yeah, seven. It was $713
right, exactly.
to
So the
get them. No,
713 to keep them from running out of cash, basically, right?
so that's right. And that's because they didn't sell inventory almost invariably in the
Yes,
early
yes,
on. It's
yes,
because of the inventory. And
yes,
that's because they did their budget overly optimistic with hopium.
yes,
They
yes,
set a price and they said, well, we're going to get more
absolutely,
market share. But the reality
absolutely.
is they didn't get that market share. And so it looked like they were going to make money. Of
Yep,
all the plans in mice and men, it doesn't
yep,
work out that way.
yep.
And so let me add a nuanced thing, and I'm going to do
Sure,
this
please
kind of
do.
slowly.
Sure.
So this is how the game works. Okay, you're going to look at the demand. You start every period for each. If you own the
Yes,
image car line,
yes,
you say what was the demand last year. And then you say, well, what do I think the demand is going to be next year? And that's a combination of a variety of things. It's a combination of natural growth. It's a
sure.
combination of the various indices that you get on your landing page, producer cost and inflation and
Right.
gas prices. Like
Business index and
if
yeah,
if
gas
gas
prices.
prices are going up, then
Sure.
some of your higher end lines. Okay. So in marketing. So if every team is marketing heavily in a certain area, that industry will grow faster then the cheat sheet says it's growing period zero, period one. Okay.
Yes,
And
yes,
so you have to decide with reason, not just, oh, I think it'll grow. Like, no, it's going to grow because these teams are marketing this much and it looks like they're investing heavily in this. They're building plant capacity. And if you have a competitor that's building plant capacity, they're committed to that industry. Maybe you can back off the marketing, right? Or whatever.
yes, yes, yes.
But
Because they're all
but
growing it with their investment. Yes.
yeah, so what the game does, and this is not realistic. I mean, it's not real in the real world. But what the game does is it says when it runs the simulation, after you hit run, it says how many customers are there this period, and then based on the value proposition and the marketing, okay, so the engineering and the marketing expenses and the price, it allocates all of those customers to one of the businesses. Okay. Now, so a customer will not go to the blue team. And if they can't buy one, go to the orange team. That doesn't work. What happens is the customers just say, I want the blue car. The blue is making an unbelievably fancy car and their price is super low. I want that car.
Yes. Yes.
And so what they do is they stand in line. Blue sells all the cars they have to sell, probably at a loss. Right? If they raise their price, they'd have fewer people, right? And
Yeah.
so, and then they have a bunch of people in line to buy the car, and that creates headwinds because now all those people go into the bowling league or they go out to their friends and say, well, don't buy a car from Orange because they promised to have a car and they couldn't
And
deliver.
they couldn't deliver. Exactly.
And so
Exactly.
that's the problem. You always want to fine
Exactly.
tune. If you think you've got a lot of inventory, okay, or you don't have enough inventory to meet the demand of the market share you think you're going to get, that's a signal for you to raise your price a little bit because that will peel off some of those people because you do not want to. Any customer that you cannot sell a car to costs you money. So that's the deal.
Yes.
And if and
Yes.
if you raise your price early on, a lot of teams experiment, and I totally encourage this. I mean, have fun with this. It's crazy. It's a game,
Yeah.
right?
Yeah.
So a lot of teams wisely want to see what the sensitivity is to price. And so they'll raise their price, okay? And they're hoping that that's a signal to the other teams to raise the price. But none of the
Yeah.
teams are looking at that or they don't raise
No.
their price, in which
Right.
case you're stuck with a bunch of inventory. Now, what happens
Because you raised your price. Is that because our team right here, green crashed and burned and so did blue because they raised the luxury so high that
that's right.
the price wasn't elastic. The demand wasn't there and they
That's
sold like
right.
20 cars.
Now, if everybody else had raised their price, then
Yes.
they would have all done really well. But
Yes.
that's
Yes.
strategy. So you don't really
Right.
know. It's like
Right.
playing a chess game. You don't really know
Yes.
what's going to happen here. And so here you want to experiment and see what everybody else is doing. And it's called signaling. You want to signal to the market potentially that, gang, we should start pushing this price up, because if you're all profitable, that's fantastic, right?
Yes.
You don't want to be the only car manufacturer. Then there'll be antitrust people all over you. Like, they're going to shut you down. You need to have 3 or 4 or 5 really good competitors that do rational
Yes.
things and they
Yes.
make a profit. And so
Yeah,
that's,
I don't want to sound greedy, but what happened from period one to period two, decision one to decision two here, is that we had a group of, especially green, who were, I don't know, morally committed to ecology, and they didn't realize the portfolio strategy that everybody else was making money off of the cash cow over on image and family, and then using it to fund the future. Instead, they invested in decision one, saying we're going to blow out eco. It's our future, but they spent and lost, not only lost a ton of money, but had to get a loan from the government because their cash was all gone because they made this bet too early on eco. And the other, all the other, but you know, it is, again, I've been taught by Professor Paul that we're looking at what are your annexes, what was your strategy, did it work or not, and how did you adjust it, and what do you take responsibility for? So this next time they started spreading out the portfolio just from some of the recaps of the numbers I gave them, and they spread it out, and it switched between these groups, and they actually, this is from their from the other chart that I've been using, which is the lost orders divided by inventory. And a lot of people, all of us want to go look at the results as soon as the sims run. But what I do is I try to guess the results by looking at the LOI, and I'm building a model because it's so predictive. In fact, I've been playing a cat and mouse game with the folks in Europe because I asked them about that particular graph that
well, that's just
Dr. Paul showed us, which is this this gap here between sales and orders, where you've invested a ton of money in marketing, and just like Coach Paul just said, if your sales are under your orders, it's clear that you're waste. This is all burnt money between here and there, where you have all these sales, but all these orders, but you can't deliver them. So all the money you spent on engineering and on marketing, and this actual curve comes out and shows the difference between the groups in that LOI predictor, which let me bring this up here so you can see what it looks like.
my screen. So
Let me get it a little bigger here. But so what this,
can you hear me?
let me move this over so you can see better. But we got the calculation of this from Europe, where I asked them, I said, it looks like all 6 indicators are sorting the team by model here with this lost orders inventory for each of the different business units. And I said, is this like a key predictor of how you rank these teams? And they played cat and mouse. They said, well, we can't answer that, but it is one of the least understood of our feedback mechanisms. And I've been posting this as part of your recap to say, look at what's going on here, where you're making, I mean, what it is the way this axis works, you can see it goes all the way up to like a positive 70, and these are negatives, and this is 0. And what happened in the first sims is the winning team yellow, you can see they were close to central. Now, you're going to see next period, they made a big investment here in inventory, because as you get positive here, positive numbers on the y-axis means you have less demand than you have production. So you're building inventories as you move up here. And as you move down here, negative numbers on the y-axis means that you have lost orders because you have more demand than production, line by line by line. And that's exactly the cost curve, that the orders versus costs that Professor Paul has been telling us. You're just burning your money if you're investing and you have less demand than you have production, or you have more demand than production. So when Coach Paul says burn up that distance between the orders and sales so they're closer, this graph does that. It shows which teams are actually near 0, meaning that the ideal situation at 0 is there's a perfect alignment between demand and production, line by line by line.
Um,
Yeah,
it's
the four charts basically the bottom line is that they were saying it's very similar to the orders versus sales where they said that the best position is at zero for the teams because when you're zero on that y-axis, it means there's a perfect alignment of demand and production. So
that's the key. I mean, that's if you want to look at a big picture organic key, it's teams need to fine tune. You want a steady hand, nothing crazy. So, like the eco group, we were talking about the eco group. They may rock at the end if they're putting capacity in and the
yes,
market keeps growing.
yes,
They may end up being a total rock star. So you're trying to make decisions for the long term. If
yes.
they're committed to that being a growing market and they are the low cost producer and they're building the right car.
Get back to recording. Yeah, where we had left off is you were saying something surprising to me, but it is very wise, which is, hey, they may be stumbling now with a long-term eco strategy, but just have a little patience. If they stick with it instead of jumping away, they may do real well by the end. That's interesting.
In the merger version, I've seen a team go from last to first in the last two decisions. Decision 6 and 7, they were getting buried,
Wow.
but they just stuck with, and it happened to be in that. And every universe is different. It literally is different. There's no way to know. It depends on what's going on. But the dynamic in that universe, they were stubborn. They stuck with eco. Now, I do need to note you don't want to be eco-friendly because you think eco-friendly is the answer.
That's your
You want
customers,
to be
right?
eco-friendly because the customers are willing to pay you for a car that you're building profitably. Okay.
Yes.
And that's where a lot of students get this, like they hear somewhere that the oceans are boiling. And so we just have to build eco cars. That doesn't mean the customers agree. And so it doesn't matter what you want. It matters what the customers are willing to pay for. And so you can't, that's just a fundamental thing. And it's different. This might be different than when you write a paper in business school uh, on a fictional thing. Does it make sense? You
Yes.
write a
Yeah.
paper and
A
you
case
happen to
study. Yeah.
be very, earth first or whatever, and that's fine. And you can imbue your paper and your perspective with all of that. This game is not that. This game is what are the customers doing given the alternatives they have and everyone's decision. And so it's forcing you back to reality, out of the book into the real world, and you have to decide, and some students are tortured by that. They're like, hey, we committed and our mission statement was to be very eco-friendly because that's what we're supposed to do or whatever.
Yeah.
And now they have to abandon that
Yeah.
because the customer's not willing to pay you um, for that.
Well, the truth, what you're getting at is the truth. There's I think 200 to 300 on my doctoral side. We did a study on 200 to 300 scholarly studies on ecology in the auto industry and were they being successful, not from the standpoint of pollution the planet at all ever, but in terms of stakeholders, shareholders, share price, all these different parameters. And the conclusion was, although it helped the image of the company and was very positive and helpful with sales, it did not impact the bottom line. And this, I mean, there's huge numbers of studies, and yet there's a lot of investment still going on. I just got, like last year, a Ridgeline that kind of drives itself and stops at every stoplight trying to save gas. So it's in the real world, it is a mix. And also, Professor Paul has told us many times, if you have some low cost eco-sensitive and you're the biggest seller on the planet, you've got thousands of more cars than image, you're putting out more pollution because of just the sheer numbers of cars out there.
That's right. That's right. I mean, go into the bicycle business if you want to not pollute. And then you got to worry about the food because those people are probably
Yeah.
eating a lot
Yeah.
to ride their bike.
Well, I have another question. I'm going down. I'll throw the graphics on top of this later in post, but this is one of the other ones I was going to get to, which was one of our teams is doing very well. I won't mention their color, but they I asked them all to borrow the $2,000 so they didn't run out of cash, and sure enough, one of them did. So thank you, Coach Paul, for telling us that. It saved our sim. But then I noticed that this particular team started paying back their loan, and I said, interesting, they must have. And I think there's just from the financial side that we've learned over just the school of hard knocks, leverage isn't as bad a thing as sometimes is taught. In fact, the point about leverage is that above break even, it's like minting money in the basement, and below you can crash and die faster. You know, it's almost like take more risk until you go bankrupt kind of thing. So there's a middle point there, but there it seems you have told me before that this is an important decision. I'd like you to explain that to the class here, which is why isn't it always good to put that money into paying back? Because there are other opportunity costs that you could use it for, right?
And no one knows how the algorithms all work,
Mm-hmm.
but my understanding of it is, and I've seen this, if you have debt and you're deploying it at a rate making more profit than the cost of the debt,
Mm-hmm.
the game will reward you. It's
Ah,
financial leverage.
ah,
And so if
yes,
I can borrow money, and I tell students, if I can borrow money at 100% interest a day and I can make 101% interest a day,
yeah,
I'd borrow trillions of dollars
yeah,
because I would just be making 1%. So it's a little less clear in this
sure,
game,
yes,
but if you can deploy capital in a business line by investing in plant, and in the five decision game, you got to get busy. Like you don't have a lot of time
yes,
to wait and see
yes,
and just have fun. And it doesn't really matter how you place in it, but it's trying to understand that dynamic. You don't want to be giving away your capital, okay, or paying your capital back unless you cannot deploy it profitably somewhere. And so if you think about it that way, like no one is going to hire you to run a company to give all the loans back to the bank and shut your
yeah,
plants down. Like
yes,
that's
yes,
not, you're being hired to come in to turn this company around. How do you do it? You do it with, now you can't issue more stock in this game, but you can borrow money. And so if you're borrowing money and you have resources and you're taking care of your inventory, in other words, you don't have a heavy balance sheet load of inventory. You don't want any inventory. I mean,
inventory plus debt, yes, yes,
one,
yes,
a couple of cars here and there, anything under 10 cars, you're probably fine. But if you've got a
yeah,
big buildup of inventory, you're
yes,
in trouble. Then you have to drop your
yeah,
price because you got
yep,
to get it off your balance sheet because your
yep,
return on invested capital goes down. It's terrible. And so you want to borrow money. And, you know, I've seen groups that have huge borrowing and they're rocking the world and they're deploying the money and they're the low cost producer
yep,
and they invest heavily in the right car. They've got that dialed in. They're marketing the right amount. By the way, you should look to make sure no groups are over marketing. If they're creating excess demand, it's probably because they're marketing too much.
yes. That happened with our green team where they put so much into marketing that it was crushing the whole industry. But
Yeah.
but finishing that point, you know, sometimes us older guys have new ideas, and that's the Arizona native Volk who wrote the value equation. And if you look through that book, which is brilliant, he's exactly saying what Professor Paul is saying, that OPM, other people's money, is the key to building wealth if you deploy it correctly. So that was what I was trying to, I didn't say it as well as Coach Paul did, but that's the point he had made to me earlier. Don't be afraid of debt and pay it back right away just because you have this thought like I don't like leverage, but it do it nuanced. Think of what else could I do and how are my plants doing, and you know, that kind of stuff.
Right. And
Cool.
if you have a bunch of loans and your leverage is out of control and your interest rate's high and you have no profitable operations, then you're just, do crazy stuff, have fun with the game, try to get back on top. But
Yes.
the idea is steady hand, deploy capital. You have four teams in this universe. Do I have that right?
Five.
Five teams.
Yeah.
So those five teams, try to find out, that's Annex 3, try to see where
Yes.
everyone else is likely to specialize. So this is the portfolio theory.
Yes.
Okay. You want to understand, and you don't want to go strength against strength. You want to find a hole where you can profitably operate and hopefully signal to your competitors that they, maybe they still compete there, but they're not competing like if your cash cow, if every team had a different cash cow, like that'd be pretty great because you would be able to tune down your operations to stay in business in those other three business units.
Yes, yes.
And then you've got one that's really generating the revenue. Annex two asks the student groups to decide which one of your business units is going to contribute in what way to each of the six winning metrics.
Oh, that's awesome.
And
That
so
is
that's
awesome.
the strategy. Like you have to look at this and you say, well, we're going to help achieve the low CO2 emissions by doing this with this business unit. We're going to help grow sales with this. We're going to help the accumulated retained earnings with that one. And so you're actually setting up a whole series. That's why it's corporate strategy, by the way. So you're now allocating. It's not like each business unit is going to win. You're allocating those business units to achieve an overall stock price and an overall victory as an organization in a corporate world that has four business units. And so in that way, it's really complex. Any student, students that get through this should be pat themselves on the back because this is a real deal.
Yeah.
And it's a quite nuanced and complex thing.
You're giving a lot of hope to our green and blue teams, which I hope we would do, who kind of just
stay on it, stay on the horse,
crashing
stay
and
on the
burning,
horse.
stay on the horse, and also in our BeYoND one, the first recording, you gave them some advice that they're all just so pleased over, which is, hey, don't just give up, but you can play to the median. Look at the middle white market line and get a little closer to that. Take a deep breath and then look at where you go from here, which is,
That's right.
don't lose hope, which is awesome.
Yeah. So don't, if you just don't know what's going on, now that's why you want to endeavor to have one student, one participant in each focusing on one.
Yes.
Like you
Yes.
should have some idea of what's going on in your market. If you're the image car, family car, or eco car, you should have some idea. If it's just too much, because it's a lot. If it's
Yeah.
just too much, the reset is match the average, see what happens. Okay.
Awesome.
But then don't just keep matching the average because that doesn't get you anywhere. You want to match the average and then make a decision from that point.
The teams are well balanced. We have the way I asked them to choose a validator, which isn't a CEO, but it's someone to interact with me right before the end. We do text groups so that I can actually run the sim because they're all over the country. But they're really dedicated and spending a lot of time on it. And I think they were surprised at the whole idea. And you'd warned me about this too, Professor Paul, that they wouldn't be used to so much of the CLC groups as they are. And when they each picked a validator, I said, that's not your CEO, but they decided, some of them decided it was, but that person kind of interacts towards the ending at the very final decision to make sure it comes in on time. And if they have any glitches, we've had a lot of internet glitches. We have a couple of students overseas, but I'm not going to say it out loud on recording, but we have a 800 number for Harvard that they can use 24/7 last minute that helps with login and those kind of issues. And they have been very helpful with that. I've seen that. I've called them late night myself when I've got a text from one of like, hey, I can't get on and we're near our decision. So that's been really, really helpful. But it's just like you're saying, we have a quant on each team and someone who's really, and they have organized themselves this way, who is saying, let's try to be a profitable team, not just, drop prices and see if we can't have the highest revenues. And now we've got, out of the 5 teams, I'd say 3 of them are really, really focused on let's look carefully at the bottom line and see if we can get above break even and above that. So, and that's happening with the ROCE. It's all negative. It's like a turnaround situation as I look at it.
That's right. Yeah, it starts at negative 11s, whatever.
Yeah.
But students should know that it depends on whether or not the other teams are collaborating with you. I mean, in a non, in a non-conspiratorial way.
Yes. Yes.
But that's why I'm sharing this with you. And if they all watch and understand the words coming out of our mouths, they want to look if the industry overall, if there's a demand and nobody is making money, that's a signal to everybody to raise your
Raise
price.
prices. Yes,
Or
yes,
you have to
yes.
build a cheaper car.
Right,
Or
right,
right
right.
now, and that's why economies of scale are so important, because you'll see if you invest heavily and you don't smear it around, that's a mistake. It's a mistake, I think, generally to, hey, we're gonna put minimum in this plant,
Give
this plant, this plant, this
everything to everyone, but yeah, put a bet on all the colors or what. Yeah.
No, that would be the opposite of strategy.
Yeah,
Strategy is
yeah,
deciding what you're not doing so that you can deploy the resources into what you are doing. And so that's a key takeaway when people realize, and hopefully everybody also realizes in their daily jobs or whatever, the people running these organizations, this is no piece of cake. And every
yeah.
decision you make as a marketing person, let's say you're a marketer in a company, even a mid-level marketing person, and you just don't understand why your budget isn't more. Well, maybe it's because that business is a cash cow and you're trying to deploy their budget is going into one of the other ones in another business unit that they have to invest in heavily in order to grow it because it's going to be the most profitable.
Yes.
And so it kind of helps younger ish people to realize that these are not one-off things. It's not that someone doesn't love you or your ideas aren't good. It's that as a holistic corporation, there are many, many claims on every single dollar. And every decision you make rolls up to a balance sheet income statement somewhere, even if you're not a quant person. And
Yes.
that's how these things get managed.
Well, we're going to sign off soon here. Professor Paul being so generous with his time on a weekend here, but I do have one really important one that I want to bring up if I can catch this and make it work, which is the idea of up in the upper right here. Let me find if I can get it centered and get our pictures out of the way. Let's see if I can do this, which is um, our forecasting tips. And this is something that we had a huge problem with, and I need Doc Paul's wisdom on this, which is that a lot of the teams were not understanding what the forecasting function was about. And what happened is we covered a little bit in Beyond One in our first video, which I got a lot of feedback, positive feedback on, but we needed one more step deep from Professor Paul, which is the idea of not creating a forecast and making that your budget, just looking at one and saying, oh, I did this, I did that. And in the last video, Professor Paul said, well, yeah, the model will accept almost anything you put up to a certain point, and be careful that you're not thinking that that is your budgeting process. It's a what if process. And actually, one team that did really, really bad the first decision, they just modeled the one model, looked at it, and they thought that was the future and thought that was the answer. And they said, oh, look, we'll get this much demand. We can raise this price. We can do all this stuff. And it was all a what if in the forecast. So they just moved the forecast to the budget. Now, what has happened is the other groups have said, oh, no, this is a what if. Let's try this, try this, try this. Oh, here's what's happening with the three different things we tried. But they ended up in a complete cash crunch because they spent all their money on excess, what Professor calls gold plating, marketing in a place where it wasn't needed. And then they raised their price so high on it that there wasn't that much elasticity and they got like no sales. So they got just themselves in a real bind with it. But our advice here, at least what I'm trying to talk about with forecasting, which I worked for years and years in, is build a pivot table, do a slicer, get into Excel and see kind of some things yourself. If you have the time and you like that kind of thing and you're the quant on the team, help your team with that. But whatever you do, do not look at your forecast just using price in the top line and not looking at what your competitors may do. And I just, again, it's looking at, I'm an ROCE guy. Professor Paul's ARE, and they're both extremely important, but looking at supply, production, inventory, cash, and all that in your forecast, not just sales growth. And the target, as Professor Paul always says, your most important forecasting target is profitability. If you're leaving that out of the equation and you don't go back in the budget and look, hey, what is that doing to our numbers? Then you're just gonna be gold plating and spending on something that your market doesn't even want, or that you're not really cooperating with your competitors, which is, I think the Europeans are calling it co-opetition or something. But it's
Yeah. Well,
yeah.
well, yeah. So just to circle back to the beginning, that organic big picture is your team has to manage resources. You're the, you're the person that has to manage all these resources. Okay. When you're deploying new capital to construct uh, inventory, you don't want to construct it if you can't sell it. That'll kill your cash. And so the starting for each one is, hey, what do I think the organic demand is going to be based on how much everyone's marketing, what's going on with the indices. Once you know that, then you want to look at what is our ability and our competitors' ability to fulfill that demand.
And one thing, don't forget what Coach Paul just said is the indices, because in that first video, a lot of you are confused by, well, why would you give us the advice to look first at business index and gas prices, and that's like the whole big, no one can change that. It's like, no, wait, that is one of the, what Professor Paul said, that's one of the first things you should look at when you're doing your forecasting.
Yeah, are you going to moving into global headwinds because costs are going up and that impacts your price too. You think even when you do your budget, if you don't look at that index, you may think your capex is fixed, but it's not. When you run the sim, it will be impacted. Your costs will go up based on that
Sure,
industry. So
sure.
you have to, and the game doesn't try to trick you there. It tells you in the instructions that these things are intended to be generally correct, but they're not to be ignored, right? So you have to look at them, and then you look at the organic demand. How big is that meatball? How many customers? And you all want to pray that when you wake up and you look at that, the demand is greater than your your industry's capacity to meet it plus inventory.
Yes,
And if
yes,
that's the case, now, if the demand is smaller than all your competitors' production capacity, forget about inventory. Now you get a problem because
yeah,
everyone has to
yeah,
decide to make fewer cars, and the price per unit is going to go up because your fixed cost will be higher, right? And so it's going to be very difficult to make a profit if everyone is playing the game with equal knowledge and awareness of what's happening. If you have excess supply to demand forecasted next period, going to be tough. It's
yeah,
going to be tough.
yes,
So that's where you want to, and I think you need to look competitively at if your competitors are investing heavily in family, and maybe the blue team is investing heavily in eco, and like, they've got a lot of capital deployed in that plant, and they're probably going to have to
yes,
stick with it.
yes,
They're going to have to try to figure out how to make that work. You don't want to invest a bunch and then not make any cars, because now you're getting the double whammy. You've invested a whole bunch of money in capital assets, your plant, and now there's not enough demand for the cars, and so they're not making cars. And so now, or if you make the cars and don't sell them, now you've got a huge amount of inventory on your balance sheet, and that will just absolutely crush. So the
yes,
teams that are figuring this out as they go through, um, and I do get pushback from students like, you should have explained this all to me day one. And it's no, this is a learning game, and why it's
yes,
strategies. Those teams
sure,
that are engaged in learning and figuring it out have a competitive advantage because they're actually doing the thinking. And
yep,
and so that's it. That's the way this game is supposed to be. It's not meant to be, here's how you do everything. You've got to go figure it out and experiment with it. And anybody could win. Literally anybody
yeah,
could win, provided they're making better decisions each period and getting those insights to start to fine tune what they're doing.
And the way that Professor Paul designed this course, as you get to the end, in our case, the fifth decision, there's a lot of points at stake in your presentation, taking responsibility for the decisions, relating them to the annexes. And this is a business strategy course and a business writing course also. So that's your opportunity. And this is the fun part of it. I mean, it's something you'll remember the whole rest of your life, gone through this in your teams, and I can see the spirit happening already. But from the forecasting, the closing up, I've got a graphic here I'll throw up in post, but it's closing back to the forecasting idea is in the student cheat sheet, and with this graphic I'll show you, it's saying that you remembered in the beginning that your strategy decided in the sim what your targets we set ourselves were: market share, profitability, and cash flow. And we can't forget that. And that's what Professor Paul keeps reminding us is let's look at the margins and the cash flows and our profitability as that's why we're in business. Otherwise, we're going to have a different C-suite. But in the graphics, you'll see that it's saying that forecasting demand is the most important thing you do in every sim cycle because it balances the orders you generate with your production capacity. Good forecasts will allow you to balance those correctly, which is what Professor Paul just said. This is so fundamental in optimizing your profitability. You've been spending money for each order generated, and it's wasting money to generate orders that you can't fulfill. So they then ask, well, that's a long-term strategy. How can I solve it short-term if I didn't do that long-term? Well, the answer is, of course, is a pricing decision, as Professor Paul said. If you have a somewhat cooperative, competitive situation, you can all raise price and move into the making money, and that's kind of two of the three teams are doing that right now in this particular team group. Then it kind of ends up by saying, other than pricing, there is, of course, long term, which is based on the strategy. You have to decide to increase your capacity where it's needed, and that takes cash now for investing. And you may at that time not have that kind of cash, which happened with our blue team. And later cash, it's going to take cash later to operate larger plants. These investments can be impacted by changes in your capex per unit, which is what Professor Paul's always telling me. Don't forget about your unit marginal capex, because if you can spread your investment over a larger installed base and you have a bigger base there, then the per unit drops, which is so important. And that results in your decisions that are taken both by marketing and engineering departments.
Yeah, I kind of think, and this is just me when I'm doing the game, I want to decide because it's anywhere from mid-teens to $80, depending on what car you're building as you go through.
Mm-hmm.
But your pricing decision, you can dial it down to $1. Okay. So if you build 10 extra cars, they're $70 cost cars, that's $700.
Wow.
Okay.
Yeah.
But if you say, look, I think there's going to be a lot of competition, the market's probably going to stay stable, and we're going to, then the last thing you do is you say, we'll build full capacity because we want to get a benefit of that, but we're going to drop our price $2. So if you sell 50 or 60 cars and you're getting $2 less, that's a way less impact on your balance sheet
Yes.
than
Yes.
building a bunch of cars that it just sits there.
Ah, yeah, yeah, yeah.
That makes sense?
Inventory kills.
So the
Absolutely.
price is the
Absolutely.
last thing. The price, you say, look, we need to try because we can't just walk away from this installed capacity. We're going to build it, but if we build it, what do we need to set the price in order to shoot at selling through 100% of our inventory?
Yes. Yes. Yeah.
And I would also say, is this as a parting idea, if a team is building up inventory, you got to get it off your balance sheet. I mean, it's
Yeah.
you can't, whether it's profitable or not, it's going to kill you. And so now
That
you're in
impacts the whole
decision.
industry because you're dumping then.
Yeah, and that's right.
Exactly.
And that's why you want to know if you think one of your competitors made a mistake and they've got a bunch of inventory, you should suspect if they're aware of what they're doing, they're going to drop their price because they're trying to
Yes.
get that off their balance sheet.
Yep.
So that's headwinds for you, price
Wow.
moving up. And so all these they're 100 things going on here, and they all weigh differently depending on how you and your team work through thinking about it. And that's why it's so fun because man, when I played this the first time, I just kept smiling, going like, wow, this is really quite the trick. And
Yeah, that's what I'd like to end on is just tell us a little bit what you keep telling me that it gets all of us so excited about how your teams will stay late after class and they get really competitive and they're in little groups and they can't wait to see your run. I mean, I just love that. And that's what I want for this group.
yeah, that's why the goal is sort of if you run it on a Saturday, then
Yeah.
Saturday night the teams can
Yes.
get on if they want to text each other like, "Oh, wow, yeah, hey, Bob, you're working on the family. I saw this." And then they do their individual deep dive, and then when they get together as a team, you've got a time pressure and you've got to now based on what everyone sees in their car line division wise, now you've got to spread the money and work it out as a team. And so yeah, my students in class, and they're probably generally a little bit of a younger cohort than yours, I think. But man, they scream and yell, and I show this, they're looking like, oh, what happened? Oh my God, what happened? Oh, that didn't work. And then they go out. My next class comes in, and they're out in the hall. I'll go out 30 minutes, 40 minutes later, and they're out in the hall like trying to pick through what's going on, and that's where learning happens. And this is and you know this and I know this, people that have done higher education know that after you get out of undergraduate school, it moves from the pedagogy of lecturing, and it moves into more of an assessment at an MBA level and a PhD level.
Sure.
You're now considering all these things, and there's no right answer, and you have
Yep.
to do the on Bloom's taxonomy. You're moving
Yeah.
up, you're assessing and you're analyzing and you're weighing. And so that's a shock for a lot of undergrad students because they've mostly just had read the book and take the test. And now they're getting into something that is a higher level thinking, which is okay, now you took all these classes. Now you've got to lay them all in one big onion and start peeling it. Like, ooh,
Yes.
okay. Now what do you do?
Well,
This is the real game, right? It looks easy. That guy riding the
yeah.
unicycle on a high wire. That looks real easy, doesn't it? Okay, now
Yeah,
you try it.
try it, try it.
Now
Well,
you try it.
what's funny, what's really funny, Paul, is that my cohort here are between 25 and 35 years old. A lot of them are accountants in firms. They're working
Great.
professionals, and yet, you'll love this. I've had them saying in the forum, um, Green, you really tripped over it this time, didn't you? And I
Yeah.
mean, these are not young kids, and yet, yeah, exactly. So the spirit definitely happens to you when you had predicted that. Yeah, this.
Well, what does Sun Tzu say? All war is deception, right?
Yes, yes,
And so if they're poking each other, that's fun. If they
exactly.
have some
Yeah,
fun with this,
yeah,
and
yeah.
they do it across the line of scrimmage in football games. They
Oh, yep,
someone
yep,
finds out that the other
yep.
guy's girlfriend got caught with another boyfriend or something, and they're giving them heck.
Yep,
It's
absolutely.
take them
Rile them
out,
up,
take them,
rile them
take
up.
them out of their game, take them out of their game. In fact, I've had teams go up on the board and they write all these graphs. They do all these graphs, and then I
Yeah.
kind of walk up and I'm like, well, what are you doing? And they
Yeah.
kind of wink at me and they say, all war is deception. Like
Oh
they're they're
no.
they're putting this information out, like
Yeah.
don't do this and do
Uh-huh.
this.
Yeah,
And
yeah.
and they were the winning team, and everyone else is looking at what they're doing, and they were
Uh,
trying to misguide them.
little subterfuge.
So
Oh, I
have
love
we
it.
want
I love it.
I want students to have fun. If they're not having fun
Fantastic.
in this class, business is probably not a career for them because this is really where it is.
This is what
And
it
there's
is.
no
Absolutely.
stakes, low
Yeah.
stakes. Be on a good team, contribute to
Yep.
your team. Even if you don't do particularly well, if you're just on the horse, staying on the horse, you're going to learn a bunch. And if you're a working professional listening to this, you already know that the team thing is pretty much how everything happens. And so have fun in the class. That's the goal. I have fun teaching it.
Well, my final word to you, Doc Paul, is that you are the most astonishing person in terms of service leadership. These students have no idea that you have so many students, and on top of that, you got all of us faculty that report to you that you're helping through every class and 50, 60 emails a day and all that. It's just a major life commitment, and I appreciate it. I want to say that.
Well,
Thank
you're
you for your
welcome.
time today on a weekend also.
Well,
It's
once we get
awesome.
everyone trained up, then, then when I get into the old folks home, you can,
Absolutely. We'll be there together.
well, so let me just editorialize. Education's changing. The world is changing. This is strategy, environmental scan, technology, AI, peer to peer. The whole world is changing at a
Yeah.
speed that is going to impact all of us in the next
Astonishing.
couple of years.
Yep.
And so I just happen to believe that if I'm paying it forward, this is the most valuable thing. We can get people out of the book into the real world, thinking about the complexity. And it's not complicated, it's complex. So there are orders of impacts that you can't possibly know. And in life, you've got to make tough decisions with you have to be comfortable with ambiguity. And if you want to lead your generation into the future, you have to be okay making tough decisions, knowing that you don't have perfect information, but hopefully you have good basis and analysis to make the decisions you're making. And that's the only way we're gonna adopt this stuff. And then at the end of the semester, when you do your report, one of the things it asks you is, a time that you made a good data-driven decision that didn't work out. And my goal with that is that you get comfortable being perfectly okay with failure, because you're going to fail more than you succeed. And it's so antithetical to most people, but you just have to be okay making tough decisions when you're in the hot seat. And if it doesn't work out, no one knows the future. So it's not possible. As long as you made it for the right reasons and it was well founded and they don't work, that's okay. You don't need to throw excuses. It's not, it's your fault, it's his fault, or the competitor's fault. No. If you run the company, it's your fault. You made the decision. Now dust yourself off, get back on the horse, and make a better one next year.
And now that you've tried this, you've made it based on metrics, not just spitballing. So you can at
That's
least
right.
thank yourself that there were metrics involved.
Well, what students do is they spitball it all semester, and then they have to do this report, and they go back to try to find data. And then they realize, like, the learning is like, man, I should have been looking at this all along.
Yes, yes.
And that's the learning. So,
Fantastic.
so if you're watching this
Awesome.
now, make a note of the data that are driving the decisions you're making in each decision. And you're basically writing the final presentation, because inventory levels, organic demand, interest rates, all those things that you're putting on the scales to make the decision. And then it works or it doesn't work. And so it makes the end of this class pretty straightforward. Just keep a little notebook of why you're making the decisions you're making.
Yes.
And the end of the semester should be pretty straightforward.
Yeah, they got all these graphs that they use to make their decisions, and then when they did the report, they showed there were metrics involved, not just hat in hand. I don't know, I tried it.
Oh, I
Fantastic.
thought this
Awesome.
was a good idea. Oh, I like
Yeah.
eco.
Yeah.
Oh, I like fast cars. So
Right.
we're just going to build a really fast car.
Oh, that's great. All right, sir. Thank you very much. I really
All
appreciate your
right,
time
Tommy.
as always, and we'll see you around the bend.
Awesome. Thank
All right,
you.
sir.
All
Thanks.
right.
Bye-bye.
Adios.